Good morning, good afternoon, and good evening to you all, wherever you are joining me at this hour. And welcome to 29th edition of Investdata Trading Academy with Ambrose live class. Yeah. Before we go into talking more of what is happening in the market as we speak, as usual, I will emphasize on those stop loss and all those stuff. But you see, the market, globally is like, they are mixed. Some market has, recorded a 3 days stretch, kind of a rally, as a result of the peace talk with, Russia and Ukraine. But as at yesterday, it's like this peace talk has stayed, but still, one of the officials from Ukraine said that talk still continue. But what implies to traders in the market was this environment is becoming more volatile. It just says that the market volatility, will likely to increase as the peace talk in Russia and Ukraine, kind of stuff. Then, despite the kind of light, and I said earlier that the talk continue, but again, the major thing is that because this stock has broken at this level, there's going to be what we call increase in market volatility. And that is why you have to focus on your what? On your stop loss at this market, because market around the world, trend, of volatility will increase, environment will become more, uncertain, uncertain for people to design where it's going. But for you as a trader, what you know that this is the time for you to use your stop loss and your price action, at any moment in any market you are playing. Your eyes should be on what? On your stop loss. You need to know where to stop so that you won't lose your capital. At the same time, where is the market? And that is why the price action on index action is very, very important at this point. Very, very important, I say, because now that we have seen them, even oil price rebounding again from low of almost $99 to around $109.27 to speak now. You can see the oscillation, but it is that peace talk that really put oil price back, and stock market of most of the mature economy was looking up. But why here we saw our own as a mismarket market on Wednesday, we saw market trying to rebound. Why on Thursday market pulled back marginally again? You can see this mistrend market because of this volatility globally, and also kind to read in between lines to see what the implication of US hacking their rate what's going to be on our home market here in Nigeria. All these are what is playing over the market. The sentiment in the market from investors that are just going up and down. What will they do? Where will they reward? I believe that because we're in the earnings season, and now at the peak of earnings season, I expect that our market will also look up before the end of the month, especially knowing that 31st March is the last day. And also don't forget that I also, during the first quarter, I will call window dressing that will come with the end of the quarter. These are the things that I expect that will play out during the last week of March. And that also guide. An MPC meeting is coming up next week. You don't need to miss up everything. Just relax, but let the candlestick, as I always say, tell you what is happening, because it reads sentiment and the psychology of investors in the market. That's why even as we're using our T line as either as a Fibonacci, or to catch, sell and buy position, where to hold and all those stuff. We also want to read the psychology in the market. That's why the candlestick will always be there even when we're using the T line, because the T line with the candlestick will give you an insight where the market. That's why I said at this moment now that the market is becoming more volatile, at the P stop kind of stay, we expect that this will actually continue. That is why you need to put your eyes on these two things I just mentioned. I said one, your stop loss, and your trade action, your price action and index action is very, very important at this moment. For yesterday, I shared a kind of a strategy that you should use to read the price cycle or change in trend. But today I want to share another one. I know that if you want to really build your wealth, in any market condition, despite the different environment where you are, if you want to really build your wealth through stock trading, you need to look at different conditions at the market. That will also allow you to know whether it's a down market or an up market. There are some things that you do. There are some industries or sectors that you look at. Even at that market, you'll be smiling. Even at the up market, you'll be smiling, because you have moved your portfolio to suit what is happening in the market or the economy. That is why the strategy you use when it's what we call a wartime or wartime volatility and when there is recession, or also when there is a kind of policy change, there are different strategies you want to use. But this is now that what you want to build wealth in this volatile market, that means you need to do one thing, which I'm going to discuss in this class for today. Before I go into technicals and the result that came from access, how you're going to benefit from it too. Then for me, this strategy I want to share anyone, it's just one of the strategies. Others will be discussed in the coming master class in April, God willing, by God grace. This strategy is very simple, but it works both in bull or bear market, depending how you use it to profit yourself or from your to kind of maximize returns in your profit. It is how you apply it or how you use it that matters a lot. It is just a simple strategy that if you keep to it or keep to it, I'm telling you, it's going to go a long way to help you in any market condition. Buying into market leading sector at the right time. Get me? Buying into market leading sector at the right time. That you, in any market condition, there are industry or sectors or companies that will benefit from that. If you know how to switch your portfolio to that sector at that particular time, before it started or before you are seeing the sign, you will stay ahead of others in the market. Others will be complaining, even that you are still building with. That's why it's not only just a trade in and out. No, because I have also going to discuss another strategy for taking profit in this master class. Because there are some stock that if you look at them, they are still moving up higher. You can see that their ADH is above 60. You can see that their earnings are looking up. You can see a lot of things working in favor of them. In that kind of company, if you are taking profit, you know you are taking profit for little on that road. Not that you actually exit, unless if the condition in the economy on the market change before you can actually exit. But if not, there are some stock that they have potential to take you far if you know how to stay and how to take profits slowly depending on the market direction. Which also part of what we're going to discuss in the master class. How to know exactly when to enter and also when to take profit and the kind of profit you should be taking and what should also guide you, which I know I've done most of them in this class, telling you how to use your T line. But in that master class, we're going to tell you how to use T line in an advanced way again to make sure that T line does a lot of things for you because you are combining it to achieve many results at once. But this strategy for this one, I say it's just simple and just if you can apply it, it will change the face of your portfolio in a down market or in an up market. Just buying into market leading sector at the right time. This makes the difference in your portfolio in a down market and up market because at the down market you'll be profiting and up market because you are in the right stock that are moving with the trend. And that's why you see that COVID-19 issue when it came, you see that the way healthcare products were selling even higher than where they were before because there's situation. Okay, now there is war. There are some countries that even war equipment will also be on high increase. But here in Nigeria, that's not our case because we are looking at where we can get value at the same time we can grow our capital. That's why you need to be at the training so that all these things will be discussed fully there. Yes, for me, that is the way to go. There's no cause for alarm. I said, when people say Ambrose, you don't say this market. When the day I stand, Rome start running because I have seen something that always guide me to see that market is still in order. We don't need to panic. It's only that you want to take profit because if market is in order, I will be the first person to shout that this market is not going the way we are looking at it. Let's start running. For now, we can see that market is still very strong despite the oscillation we are seeing in the price because the T line remain a stronger instrument for you to know where the market is going or where individual stock is going because it will help you. Once you see T line, either the what we call a price action or index action going far from the T line, it also gives you information. When it's coming closer to T line, these are the things we're going to discuss more on how to use it to profit your portfolio and to put your portfolio ahead of others in the market because you are also gathering information. In equity investment, you learn how to profit or how to better your portfolio. Like I said, any day we are meeting like this, as you are going, you should go with something that also change your portfolio for good. Yes, at this hour, we want to quickly look at how the market is doing, the position of the market as we speak now. Market is pulled back marginally as we speak now. You can see it's looking down here. And pull back down, but straight above the 47,000 mark. I can see that market is in red here. Then let me quickly zoom it here so that you can see. You can see before I go into why I'm doing it because I'm going to go into the market situation at this hour so that you can get the picture. Yes, you can see the pullback here. This yesterday, and this is sign in the technical analysis. You saw this will happen. It's also this what I want to discuss today. Technically, you can see what happened here, what happened, and what we got here. And also what happened here after this. These are the things that will be shared detailed in the masterclass. How to take them to catch what opportunity in the market. But as we speak now, I said the market has pulled back. You can see it at the board. At the market has pulled back, that means market is in the red. But the market rate as we speak is positive. Positive today because we're having a 9 gainers against 7 as we speak. And if you look at the top trade this morning, top trade we're seeing the banking stock kind of dominating the top trade this morning. It tells you a lot of story, knowing that some of the banks today their qualification day, while others are releasing their results yesterday to today, while others are marking down or qualifying is the upper week. I tell you that between now and end of the quarter or end of the month, we'll see a lot of movement and stuff. And also the good thing in the market as we speak now is what is happening in the fixed income market also is also a plus for the market. You can see the kind of pressure that was raised yesterday, about the euro bond. It tells you that now that will have kind of positive impact on the national reserve, which will also be a point of attraction to anybody that wants to buy it, because that will usher up our reserve, which is good. And also it will reduce the tension to borrow from Nigerian market, local market. That means this rate we are seeing or the yield in the market might also remain like this. And also don't forget that if we are seeing inflation taking a ugly head up again, it's going to also threaten the fixed income instrument. It's a potential threat to them already, because if we are seeing inflation moving to around 15.70 and it comes to 60, and your return even on the short and long run you're having a 13% mass, the 12, 8, 6, 4, you can see that your negative return is increasing. That for that I see some portfolio adjustment and also inflow from. But the good thing is that this will be kind of a plus for the market if we are seeing this kind of move. And don't forget that MPC meeting is coming next week. I don't see on Monday and Tuesday. I don't see our MPC members, because US have hiked their interest rate, or either Euro have had they jump in. No. The client the environment that is not from our own environment. We want to see where are we going. We want to sustain this economic recovery we have seen so far. What is the impact of what we are going to impact from from this matured economy to economy in terms of imported raw material that will affect our product. If we are looking inward, we have done backward integration. How are we going to manage the economy to maintain this recovery? Because if we quickly do, because we are seeing other economies, adjusting their rates up to control inflation, we want to quickly jump into conclusion and start doing that. We might hurt the recovery we are seeing in terms of economic activities. But if we want to really make fund available, I think we should watch to see what the impact of this war, because it's just 3 weeks now can see. Let's see the impact then. It might be the next MPC, or even at the middle of the year, you can think of hiking rate, because we know that this pre-election year, politicians are about to spend money. Then we might see more money in circulation. But for me, this is not time for the money to also hike their rate. Yes, back to the market situation as I was saying. I said market were having a positive breadth of nine gainers against losers. And I said the top gainers as we speak now are PZ. PZ is topping, followed by Niger Insurance, UPDC, UBA, and the Zenith Bank. These are the top gainers out of the 9 that are looking up. Then the loser side, I said we have 7 losers as we speak now that made the market kind of marginally positive market breadth. 9 against 7. We are seeing an Access Bank, leading the decliner chart, followed by GSK. We're seeing Boa Food there. We're seeing FCN Cocoa and Africa Prudential. These are the top losers as we speak at this hour. But if you look at the top trade, I've said earlier that we have the more financial banking sectors there. We have each Transnet is the one leading the pack, followed by Access Bank, Fidelity, FBN Holding, and GT Code. These are the ones leading. But before we go to the chart, I want to quickly look at what is happening in Access as we speak now. I think Access is what we want to look. Even the chart after looking at the general market now, that is displayed on the screen that you are seeing. If you look at the result that came from Access Bank, you can see that is why I said we will always trade the chart as a artist, even when we have not know what has happened. Looking at that this morning, it tells us something has happened. What you not said where will be the right price, I will buy this stock. That the right price, this stock will stabilize with the rate of pullback, either panic selling or people not because the chart was saying, then you now go and look at the number of what that happened, because something has triggered the kind of change in sentiment of investor in the bank or in the stock, which you know that it won't last for too long because we start it. Because we are looking at where will be the right price for you to enter. That is where you bring all your indicators to the what you're going to do. But we want to look at the numbers that came from this bank also to see if the panic that we're seeing it kind of if it's worth it or not. If you look at the bank like Access Bank, I tell you, Access Bank is classified into two banks or two set of classification of stocks. One is the Access Bank is a value stock. At the same time, it's a good stock. I know that value stock and a good stock have different definition. For value stock, where you have made money, you want to pay your dividend consistently, fine. I know you can stand any different market situation or economic situation. Being a financial sector, good to know that banks, the financial sector are the engine of any economy, and this bank is working strong in terms of acquisition, expanding out to other African countries, which is good for them. But now their result is fantastic. I will tell you now, the number that are managed from Access Bank beats all that have come from the industry in terms of what parameter, not in terms of whether pay out dividend or not, but in terms of performance. When you look at what they have done, I will tell you that they are the best results so far I have seen. This is a bank that the top line, which is the gross earnings, were up by almost 27.09 percent. The gross income, whether gross income or what, they're moving to almost a trillion, 971.8 now 89 billion against 764 point no point 172 billion. You can see this. It says that this bank income is getting better and better. That means you can see the impact of the expansion on it. Then quickly look at the PAT. I want to tell you that this is where most investors are interested, like you and I. We have seen that the bank has improved in their non-performing loan, their cost of running the bank, the cost of employment, paying their staff, running activities, charges, interest, because most time, I tell banks always create money. I create money by giving out loan. And see that this bank also have grown their loan lending out to the public and to the banks has improved. That they have done more. It's not only that other activities there, but coming back to what matters to every investor, that after you have paid your tax, what matters, you have deducted all your operating expenses, you are looking at the profit after tax. We call it the earnings, that from Investdata earnings, whatever you call it. You can see that it has moved from 106 in 2020 to 160.22 billion. That is almost a 51.13% growth. You can see that the top line and bottom line meet any standard in the world, especially here in Investdata we have our own standard. That you must have a top line that's 15% plus and above, also bottom line, and your profit margin must be above 10 or 15% and above, which you can see that this bank, as to speak now, has beat all these criteria one. And also the good thing is that the earning per share also are moved from 3 naira 1 kobo to almost 4 naira 58 kobo. It tells you this is good. And when, as at this time, when the result in 2020, it was selling around the 9 naira 15 kobo, and the price as a result was yesterday was 10 naira 40 kobo. You see, and this will give you an call any P ratio. P ratio tells you how long you stay in putting your investment. Also, when it is good, it also have another interpretation. But when it is low, it tells you that the stock is also good and also undervalued. If you want to use that metrics to value the stock. But for me, as assets now to speak now, with the result we have released with the 4 naira 58 kobo, the earning per share the P ratio is within 2.2. So that means two times. That means you have 2 years. Let me put it that way, plus to put your investment. If the earnings of this bank remain like this, but if earnings increase, it become a shorter period. That is why it depends on what some company also has a higher one. It depends the kind of metrics you are using, or the model also has another advantage of how to put the analysis there. But for me, these figures I'm seeing here are very, very impressive for assets. You can see also assets return on equity improved from 14% to 15%, which I said in a standard two, you must have what 15% return on equity and above, which assets have met. And also their P ratio is very attractive, very small. Their book to value as to speak now per share is 29 naira 74 74 kobo from 21 naira 13 kobo in the previous year. The book value, that means this stock, I can tell you, on the price is selling, even now at below 10 naira, it's grossly undervalued, almost 100% undervalued. It tells you, where this stock is. It might not be enough to analyze it, but it gives you an insight what is happening. Look at the price and the book value of this company. And don't forget that this is a bank that also is expanding to go into a whole school, which the performance when they are as a single bank, and see now they're going to whole school, what's going to be at the bottom line of this company or this bank going into the future. Then return on assets also remain flat, the same figure 0.01 or 10%. 10% or no, want to put it 0.01 or 10%. No, the two remain flat. For me, it's a good result for assets. Assets profit margin improve from 13.8 in 2020 to 16.49, which I said for Investdata, all the criteria that we used to say this company is wow, assets met there. And that tells you that if the pullback you are seeing is a result of a payout of 70 kobo, which that I said earlier, a different evaluation for value stock and a growth stock. A growth stock is a company that even don't pay you dividend, but brought back their profit back to expand. And this company is also, this bank also have been expanding, acquiring kind of building capacity, and they are still paying dividend. But when you have building capacity, you are bound to spend money if they are retaining most of their earnings for expansion because of what they are doing. For me, it's okay. Any per share of 4 naira 58 kobo, and they are paying you 1 naira to feed. They paid the 30 kobo earlier in August 2021, and now final dividend of 70 kobo, which is together 1 naira. It's a good start for the bank. This pullback for those that are designing, investors or traders, it's an opportunity to buy at a good price. And for me, this is what I would advise. But we want to also look at the technical situation to know exactly the right price to buy. I said that fundamental is for you to have your watch list. Why your technical will tell you the right price to buy, which we do for assets as we go to that session. So we're going to do that for assets. I'm telling you. Yes, now we're looking at the market here. This is the market as we speak. You can see the chart from February to this way. You can see that market was oscillating here. Here you can see, but market has remained stable above what 47,000 mark. For me, it's a good one for our market as we speak now. This correction again for me is another opportunity, especially at the outcome of MPC meeting also triggered, being the last week for the month of March, and being for the end of the quarter. We're going to see portfolio dressing, portfolio or window dressing by the fund managers and also the good thing is that the fear of a hike in interest rate that will lead to our own here, fine, but not immediately, because we expect to look at our climate different. And now the success of the Eurobond that was president was made from the debt management office, for me it's a plus, because that was today that we won't borrow much again from domestic. We need to, because to have access to fund that is relatively, but don't forget that oscillation in dollar and all those stuff, what is happening on my will be able to meet to pay, but it's a good one. That means to kind of to bridge the deficit in the budget for 2022. We're also making steps to make sure that it's achieved. It's a good one, but that alone will also attract kind of investment to Nigeria, knowing that this will also kind of show up our results, which I've said earlier, and also it's a plus for equity market. As we speak, the trend in the fixed income market. That's why I said as a trader, you can look at this what cost flow of fund moving from equity to fixed income, the same financial market, but we're looking for where a better return. I see that better return in the market. Yes, we know that there's some elements that with equity market, but if we do it well, we'll stay ahead of the market. We can see here the trend. Let's quickly call our indicators. They are very, very important. Now, before we look at assets, I think assets is what I want to look at final, so that we can see what is happening, the right price to buy assets as market is reacting to that stuff due to the 70 kobo dividend declared. As I said earlier, the earnings of assets or the performance is wow. It's a good number that for me, if you're in assets, even though there's a 70 kobo dividend, I would say hold on to your assets. Assets has a good potential to sustain this performance, and if that is done, to go a long way to support the price at the end. These are part of what also we'll be discussing at the master class, that you have to look at some things, not just only the numbers that are just seen. Yes, as we speak now, you can see, if you look at this market now, the market has pulled below, is that below the C line and what and and the 20-day moving average. You can see it here on the day of chart. You can see it here now. For me, there's what money flow are still looking down, and while MACD is still flat as we speak at this point. And volume is also coming up this hour. I can see volume we're seeing here, almost touching the average for the day. But let's look at 1 hour chart first before we quickly move. Yes, you can see on the 1 hour chart, you can see that the market is below the T line and what and the 20-day moving average. It's a sign, but on our chart, you can see that it's going to show us green on the hourly chart, which is good, which is good, which is good. But here you can see there's a little divergence between this trend and this indicator. We need to look at this. For quick one, before our time runs out, let's quickly look at assets. Asset is the one that I want us to look at and see the right price to enter this stock now. You need to know the right price to buy assets. If the market is taking assets like this, you as a design investor, this is where you need to also, or trader, take advantage of the sell-off that you are experiencing. What will I do with my position in assets? These are the things we want to discuss. Looking at the chart will also give us. We have seen the fundamental of the bank. And let's see how it's going to play out now. Let's see what is happening in assets. Where is likely to be the right price for you to buy assets. I say we are seeing that the fundamental is good and market is treating the bank because of the 70 kobo dividend paid. Where is the right price to buy assets now is what we want to consider in this chart. We'll call all our indicators here to see the right position of assets, then we can now know the right price to jump in. This is stock that I pulled back to almost 9 naira 50 kobo this morning. Now we're back now to around 990 or 970. Let's go on. We want to look at the price when we get to the place. Yes, this assets to speak. You can see this line price. You can see what happened today. Boom. You can see the pullback. And if you bring your candlestick, this is what will trigger any investor or trader's attention. What happened here? You can see immediately it closed at 10 naira 40 kobo, down as you can see, even touch as low as 950 before coming up again to at this level. Then we're selling around there as we speak now, around the 990, which is strong. It's a good one. 990. It's a good one. That means it's resisting the decline. And you know that today is the Friday, last trading day of the week. They are about to profit, but for this stock, the opportunity for design investor to buy. You can see that this stock trying to form a resistance at this same level. You can see the level here, this level here, this place that market saturated here, the price action kind of saturated here, and before there's a breakout, consider it's where it is now. Let's call our T line down here now, and our polygon band will get the whole picture clearer and why you should take advantage of the pullback you are seeing to buy the stock. It's very, very important. Very, very important. Let's look at our indicators first. What is happening at this point is very, very important. Our T line, I don't joke with it. I know why. Get you to have easy reading or to know exactly what is happening immediately. Oh, sorry. I like close something and nothing happened. Just bear with me. Try to close something so I can see the chart very well. Take quickly something else and change it. Change the chart. Let's see. We're still going back there. Now that will be the last chart we discuss today. Don't worry. Not to catch everything that is available in access now and see how it's going to play out next week, and we'll see how to take advantage of the what we just saw now if it continues next week. But this pullback for me, it won't last. This market panic selling, and I can see that most investors that took advantage of it, they'll be smiling now because they did the right thing. You can see the pullback here. You can see that the volume already is above the average traded volume in assets. And I tell you, when you see volume strike, it gives you information here that there's a bad kind of a poor payout according to the market. But for me, what they did is in order, and you see the performance trying to resist the decline here, because looking at the fundamental, they are okay. I see that when it tested here, it went back up again. But let me call the other indicators, as I've said earlier, so that will help us to get the full that of what is happening access. So that's why when we are doing live chat, especially on the day chart like this, it's very, very important. It gives you quick information. That's why daily chart is different from weekly and monthly. Monthly for a long-term investor, medium-term investor, you can be looking at your weekly and other. But for we that are doing the weekly chart, weekly trading and day trading, you need to look at, for day traders, look at hourly. For weekly traders like us, look at daily to give us insight on what to do. That's why here I change it again to 8. You can see that the line remain blue. As we speak, you can see that access has crossed down the signal line and the 20 moving average. For me, a sharp, can see it here. Then for those that want to wait for this to cross over to buy, that is the right thing to do. Now that they are crossed down here, when they cross over, you can buy. But because we have seen a strong support level at this place, you can see here that it tested. You can see that here that if there is another pullback, it will go below. But for now, we are seeing that 950 has been a strong support for today. We want to see how it's going to be by Monday. You can see the trend here now. I see that MACD is looking down. It has crossed up before, but today now it has tried to cross to go. It has gone even bearish already, because I can see that it has crossed the histogram line. You can see the smaller one has gone down. I mean bullish, and also money flow index is looking down. Tell you that all the indicators are moving that direction. Tell you that the downtrend is strong, but for me, resistance is already has also been shown. You want to watch for it to jump in if you are a trader. But for those that took advantage of the price of 950 this morning, if you are there, I would say hold your position. Even when it goes lower, you can increase it. But those that took advantage also. But for those that are watching, that are yet to enter, you can also confirm the breakout of the T line and the 20 days moving average before you can jump in. Assets for me have a good fundamental, and the chart is not negative, it's not bad, because we have seen that it has tested a strong support level. If you hold on this here at this point and go to go, also a good buy signal here that it touches also the lowest polygon band. You can see these are things sorry, you can look at to take vision. Usually now we are seeing the negative sentiment because of dividend. It won't last because there's other good things for the bank. Thank you and God bless you. Look forward to see you at the question and answer tomorrow. All the questions you have for this week, feel free to ask them tomorrow, and also discuss more on what is happening in the economy ahead of MPC meeting Monday, Tuesday, the bond market, what is happening, inflation, economic data, how it's going to influence the market,